Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, November 17th, 2022. It was an interesting market today because it had its periods of, oh, you're going to go, and then it had periods of, oh, you're not. Then it had periods of, you're just going to go sideways. Then, oh, you are going to make this move. So it was kind of an uneven day in a way that, again, does not necessarily put the larger count in jeopardy, not at this point. But I have, you'll notice, switched it back, but I took the 2 away for right now. I am still counting it as an intermediate second wave counter trend rally, but they're still in process. And so I want to start here on the daily chart to kind of say that I am fairly satisfied with this labeling. But I can't put the 2 there because it's not clear that it's going to be done there. What does that say? Or what could it possibly mean? Well, understand under Elliott, we do have potential that it could be ABC. We get an X wave and we do another ABC, which would be a double ABC. And then there's also triple ABCs. These are patterns that R.N. Elliott found within his work. And he notated them and he told you what the breakdown would be. And what would happen is if it's going to be a double, you have an ABC, then you have a larger X wave, then it gets labeled X because you're going to do another ABC. So we may have already had several, but so these can be more complex. But right now, I'm feeling that, again, this A, it is a 3-wave pattern because there's A, B, and then 1, 2, 3, 4, 5, C. Then we pull back in a B. And then again, 1, 2, 3, 4, 5 to form wave C. Now, that's the daily chart. So if I start taking this down, I'm not a big fan. I could go to the 4-hour chart. It's going to look pretty much the same, but we get to pull it open and look a little bit at the internals because these patterns were not easy and remain not easy. So here we have that A, B, and then we have 1, 2, 3, 4, 5. And the 4 slams across the 5, not slams, but, almost encroaches. On a tail, it encroaches. This is on the 4-hour, but it's still, you can tell now a little bit how choppy we had numbers come out that caused larger moves, but you can see how now other moves that have followed, like last Thursday's, that make the previous week's decline look minuscule. But it was a large move and it was wild to trade. As was that. It was a surprise. It was incredible to just be there and see it happen. If you're able to trade it and you did well, you were rewarded for being on the right side. But that particular side kind of surprised people because of the intensity. Now, what could this be? Here's the 4-hour. You start to see like a 1, 2, a 3, maybe a 4. But when we go drop it down to the hourly chart, in fact, I can just open it here a little bit, right? And if we drop this is how I do this, folks. I drop it down to the line chart because that's the closing basis. And that's actually the basis that Elliott worked from. Because don't forget, they didn't have charts that were created for them. It was a pencil, it was a piece of graph paper, it was a ruler, it was compasses, it was all kinds of things that were available in that day. But so his is that getting the number once an hour of where an index was and then plotting it and connecting the dots. Even if I do it in this particular manner, you can kind of say 1, 2, 3, 4. It's not overlapping 1. And as much as it's come back. Now, let me take it back over to the candle. It's 1, 2, 3, 4. Are we at the top of 4? We're going to go tumbling down again. And again, on the 4-hour chart, labeling the C, I might then be able to put an intermediate wave 2 above it. The market allows me to get a minute wave one in. So what does that mean here? Let's take it down to the hourly chart. We still have the ABC. Now I got to make my rearrangements. When you pull it out to the bigger charts, it can get a little bit skewed in terms of where they are because of the nature of the chart. So let me put that there. And then we have 1, 2, 3, 4, 5. So that's the wave C. Now, where are we? What can we be doing? Again, 1, 2, 3, 4. This overnight, not much going on, but the follow through. So these extended little moves in here. Now I'm down to the hourly and I'm going to go like this. See if I can't pull that open just a little bit. Bring it down just a little bit. So we can see 1, 2, and then what's the subdivision? These can be problematic, but we're going to have to work with this to say if this is a 3, then there's a 5 in between there somewhere. And possibly we get 1, 2, and then 1, 2, 3. For 3 and a 4, this is definitively 3 waves. So we've got to let this play out. If I close it up a little bit, I can accept it as a 1, 2, 3, 4. On the hourly chart, I will always be looking for some confirmation by getting that first 5 down. This is real sloppy. I'm not becoming a big fan, but we got sloppy here. We had very sloppy here. And those were in rally phases. So this is in declining phases. Now, this was an overnight. This was Globex. So it's not as clean, but it may become clean. This is, again, as we drop it to the line chart. 1, 2, 3, right? 1, 2, 3, 4. We get a 5. Then we have our first 5 down. Then you can put that 2 there. Now, let's talk about tomorrow. Tomorrow's expiration. It's a November expiration, and they're rolling. They are rolling things out. I was just looking at that before coming on to make the update. And we're going to push higher. So you're going to get it to a point where if it overlaps wave 1, it's going to be up here. Actually, we could do it on this basis. We may have to. Because they are jumping. They're coming in. They kind of bought it up a little bit. So this is how they come out of the gate. They're going to have it. Again, tomorrow's expiration. I do think what's going to be in play right now is we have NVIDIA wanting to jump back into play. We have Microsoft wanting, so we have all the big boys and they got the expiring options tomorrow. So what part that I really do want to add here is that when we're talking about the market, it's not that the market is really presenting itself as bullish and this is all good and now we're going back to that type of a move and it's just going to last and so we can buy and hang on. Please don't be misled. Yes, the market is going up. Yes, there is money to make on the upside. But this whole move, truly, if we were to go and look, it is being produced, in my opinion, in my humble opinion, it's being produced by option traders. And that's not good and that's not bad. Because I want to tell you what it does do. It pulls in a ton of money. There's a ton of money flowing in and around the markets at this moment. It takes money to push Apple up $2. It takes money to knock it down $3. And it's flowing back and forth. So that's going to be my main point, folks, really. It's like if we can just move away from having a bullish or bearish posture and just trade what it's doing, mindset would be like, just make money. Just make money. That's all it's about. So now we're trying to count what these emotional responses are really producing. And they are producing a more corrective phase. So the reality is, if we had to factor in the economy and what's looking forward into the economy. I mean, they're pretty much now telling us we're going to go into a recession. We're going to go into tighter money. We're going to go into some areas that people are not going to be so certain about. But we will go there. But in the meantime, we get these incredible runs in Apple, incredible runs in NVIDIA, incredible runs in Amazon, AMAT, Advanced Micro, IBM, et cetera, which are just money trading firms moving in and out as the public tries to chase it around. Now, that's money coming in and out. There's no reason not to make the money, but I'm not going to take a bullish or bearish posture. I'm going to try to follow a wave count. Right now, I'm still looking at this as it's being a overall corrective counter trend rally with additional downside to do. As long as this stays 3 waves or a combination of 3 waves, right? An ABC, XABC, XA, that we get all these combinations of 3-wave structures. Followed, what should come next is an additional 5-wave structure down. 5, 3, 5. That's almost at a minimum. That's what you're going to be looking for. If this remains an ABC, and in other words, 3-wave structures, the next one is going to be 5 down. So this has limitations. So does that, but it's going to resemble that. It's going to resemble that type of strength. Now fit that into however you want into what's going to be coming in the economy. The wave pattern itself is telling us this is coming. Now, if we want to believe it, that's fine. If you don't, that's fine too. But I'm going to trade it. And I'm telling you, this is what it's telling me, that the trade is going to continue to work itself lower. It did a beautiful rally last Thursday. Knock your socks off rally last Thursday. But that will turn, that will change. But it will continue to stand as a kick butt rally. Do not misunderstand me. As a trader, it was awesome. But now we're getting ready to what's coming next. And I think that we're going to get a couple of those to the downside. And it's going to come pretty quick and maybe hard. This was starting from a lower level. Now we're up 100. Well, not anymore. But we're 100 points above where we were. So we've already dropped some. Now we're going to rally back up, and then we'll probably drop some. We may rally more. And maybe it's not a 4. Maybe it's an ABC, and there's the X. Or A of X. I'm telling you, there are a lot of combinations that can go in here that keeps the market in confusion land, where it becomes more difficult just to try to figure out, what are you guys doing? What direction are you wanting to take? And then on top of that, let's add every pundit on the air, on a financial media, has got to say something, because that's what he's getting paid, he or she, or he's getting paid to do. So should I say something negative? Should I say something positive? The rest is up to you. It's what you want to listen to. But it's this place where we are that tells me, and that is up to some very large firms that are trading in the options. And yes, reality does come in. And yes, the country is not looking real bright right now. So we latch onto figures. We latch onto every little minuscule change in those figures. And that's okay, because you know what? It produces these fantastic moves. We need to not get hung up on the direction. We need to get hung up on what's going on. That's a humongous move, humongous move. So your mindset's really got to be clear. If you're hung up on, oh my God, what's it going to go up? Is it going to go down? What's it going to do? Then you need to get out of the position, or you need to tone the position down, or you need to change something, because the market definitely is not going to. So if you're on the wrong side, then yeah, you've got to have your set of rules. You've got to have stops. But this is all very tradable, folks. It truly is. Yes, a lot of it actually during the day can be like, oh, what a yawn. It's not doing anything, but because we're glued to it. Take a break, walk away, do something else. It's not the last trade. You'll have more time, et cetera, et cetera. Okay, what are we looking at? And I'm sorry, but I feel it necessary to really include this, because that's actually what's going on. If you're there watching this all day long, you're like, oh man, my eyes, they hurt. You get up, walk away. It's not the last trade. This thing will figure itself out. If you come back and you see that, it's like, oh, all right, fine. It picked a direction. Stop questioning why and just look at what's happening. There's a lot of money being flipped and flying around. No reason that we can't go in and grab some. Instead of giving it, every time you take a loss, it's somebody else went into the market and they managed to grab it. No reason why you can't. So there's good habits to make. Now, I'm waiting. It could be an A of X. It could be a 4 with a 5. Then we get another, a 4, and ABC, a 3 of 4. And we get a wave 5. And then from that high, where I would mark wave 2, right? I would mark, not there. Then we maybe have our first 5 down. But this is not easy. If I get the first 5 down, I'm going to look for 3 up. We have expiration tomorrow. If it goes from here, this is going to be an ABC A, and then we're going to do a bigger B wave. And that B wave can get all the way back up here, can go up here and still be a B wave. Then we get a C wave, and then that whole thing is an X. And we go on from there. Okay. I'm going to go over into the NASDAQ. I don't mean to spend too much time. All of the commentary stands for the NASDAQ as well. Trading is trading. So here as well, it gets difficult. So I took off that 2. I brought the C wave back. I didn't call this a wave 4 because it doesn't fit. Yeah, it could be 3, but what's all this, et cetera, et cetera. If I same deal, take it over to the line chart. Oh, 1, 2. All right. 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 of 3. 1, 2, 1, 2, 3, 4. That's over that. So you see, even if you're looking at this on a line chart, 1, A, B, 1, 2, 3, 4. But it's already overlapping. A, B, C. You're going to see why I have to wait. What I can tell you, it's not necessarily bearish, nor is it bullish. It's going to trade within, primarily because it's expiration. So it doesn't know. What we do have, we have resistance right above. 11,742. We have support right below 11,571 down to 477. We have additional support as it comes off. That is for the larger wave down. I mean to take it off. Sorry, I'm going to take that off. Let's work with the moving averages because I'm not sure what this is. We know we'll have resistance points. We know we'll have some support points. And you can be able to, once things get going, you can attach what you believe is the direction. But right now, right now it's inside of all this. So upside, yep, you should have some. We go back to right now, you're going to have some that'll probably go from here. Yep, that's right. From here to here to here for upside. And that would be fairly accurate if we're thinking that this was a 5-wave structure and this is 3. I'm looking for another 5. And it's going to go in that direction. So here you have it. And now we have 13,000 if the market continues just to push itself higher. Again, what's going to push it higher? Well, I'm going to tell you, one of the stocks would be Apple. Why people bullish in Apple? I don't know. But I'm telling you what the order flow is telling me. What the order flow is saying. The order flow right now in Apple, they tried to push it down. It didn't work. They brought it right back. They brought it back to 150. That's a nice round number. Next up is 52.5 and then 57 because of the strikes. And then 160 and then 65, 70, blah, blah, blah. Now, where could it go tomorrow? Well, I think it could go to 152.5 to 155 for sure, easily. It's making those $2 and $3 moves intraday pretty easily, but they're up and down. So if it's just in the upside and you're going to put 2 or 3 points on, sure, why not? So again, both sides can come in, both sides can do what they want to do. Right now, I am going to finish this up for today. Consider this. Try not to have a bullish or bearish bias. Play the price action. Play the moves. A lot of money is being shifted around. You can step in. This is a product, and it's a cash product. So you put your money down and you buy something, you put your money, you get your money back when you sell it. Sometimes you're a winner, sometimes you're not. Just keep trading, folks. Don't get stuck on a position. Don't walk away from your stops. There's enough movement, if it's going to do it, where you're able to get out of a position, take a smaller loss, make it up in the next trade or the next trade and a half. But you keep your mindset focused on trading, on moving, on participating. Anyway, have a wonderful weekend. Have a great trading day tomorrow. Again, it is expiration. So be ready for both sides. Next update will be on Sunday, the 20th.